Imagine investing just $100 every month and turning it into hundreds of thousands of dollars over time. That's the power of the stock market. But for beginners, the stock market can feel confusing, risky, and even scary. What stock should you buy? When should you invest? And how do people actually make money from stocks? In this video, I'll explain the stock market in the simplest way possible, so that even if you're a complete beginner, you'll know exactly how to start investing. Let's begin. The stock market is simply a place where people buy and sell shares of companies. When you buy a stock, you are buying a small ownership piece of a company. If the company grows and becomes more valuable, your share also becomes more valuable. That means you can sell it later for a profit. This is one of the main ways people build wealth. In fact, some of the richest investors in the world made their fortunes through stocks. There are two main ways investors make money from stocks. 1. Price growth. This is the most common way. Let's say you buy a stock for $100. If the company grows and the price increases to $150, you made $50 profit. Simple. 2. Dividends. Some companies also pay dividends. A dividend is basically a cash payment to shareholders. For example, if you own dividend stocks, companies might pay you money every 3 months just for holding their shares. This is why many investors build dividend portfolios for passive income. The real magic of the stock market is something called compound growth. Compound growth means your money grows on top of previous growth. For example, if you invest $500 every month with an average return of about 8% per year, after 30 years, you could have over $700,000. That's why many people use the stock market to save for retirement, financial freedom, long-term wealth. But there is something important you must understand. The stock market does not go up every day. Prices go up and down constantly. Sometimes the market crashes. Sometimes stocks lose 20%, 30%, or even more. But historically, the stock market has always recovered and grown over the long term. That's why experienced investors focus on long-term investing instead of short-term trading. If you're new to investing, many experts recommend starting with ETFs. An ETF is a fund that holds many companies in one investment. For example, one ETF can contain 500 companies at once. This reduces risk because you're not relying on just one company. One of the most popular strategies is investing in S&P 500 ETFs. These funds track the 500 biggest companies in the United States. This includes companies like Apple, Microsoft, Amazon, and many more. Over the past decades, the S&P 500 has returned roughly 8 to 10% per year on average. This is why many long-term investors simply invest in ETFs regularly. Starting is actually very simple today. Here are the basic steps. Step 1. Open a brokerage account. This is a platform where you can buy and sell stocks. Step 2. Deposit money. You can start with small amounts like $50 or $100. Step 3. Buy your first investment. Many beginners start with ETFs or large, well-known companies. Step 4. Invest consistently. The key is to invest regularly over time, not just once. The stock market is one of the most powerful tools for building wealth, but it rewards patience and consistency. You don't need to be rich to start investing. You just need to start early and stay consistent. If you enjoyed this video and want to learn more about stocks, ETFs, and passive income investing, make sure to subscribe to the channel. And in the next video, I'll show you the best investments beginners can buy right now. Thanks for watching.